Okay, let's talk about what the scenario is. Let's try to put this all together into a scenario. We're going to follow, I think, the near-term seasonal and historical analogous scenario of a little more rally, maybe more than a little rally if we get that ascending triangle, and then move into a sluggish bear move as we move into the fall. The rally might get up to $70 for WTI before U.S. producers start to flood the market. So we might set the cap at 70. Now that ascending triangle, if it breaks out, that might get us up to $80. Now if it happens quickly, remember there's a lag. If the price goes up to a certain level, the producers take a while to get their production going again. So we may see a pop into the low 80s before the U.S. producers are able to react and start to increase the market. Now the way I look at it is this. There's really kind of two scenarios here. One of them is sluggish up and then sluggish down. The second potential scenario is pop to the low 80s and then collapse to half of that. So we have to see what the volatility of the market is. If it breaks the ascending triangle on strong volume and a strong price movement, then we'll get the pop up into the low 80s, and that would be great because we make a lot of money on that. The sluggish up and sluggish down will still make money, just won't be as much. Let's carry on. Demand will be weaker than expected. Right now, everybody is saying, oh my God, the economy's booming. What they're really doing is looking at the US and not looking at the rest of the world where it's not booming. And of course, that's going to be due to continued lockdowns, slow vaccine rollouts through most countries, including Europe. Canada's only 3% vaccinated. Asia, South Asia, that's India, Africa. That demand's going to take at least another year to come back on stream, and it may not be till the end of next year. So that would be like 18 months from now. But as the rest of the world comes on stream, the US and China will start to slow because of anti-growth policies in the US and China. For example, China's probably going to be instituting a property tax. They have a trial going on right now, but they want to expand that trial. Well, that means the housing sector is going to come under pressure, which means there won't be any new housing, which means the economy will start to contract. So anti-growth policies in the US and China are going to slow the economy, possibly even causing a recession in the US and very slow growth in China. Okay. So price moves to 70-ish, maybe pop to 80, then starts to fall below 60, maybe down as low as 40 due to slowing demand and increased production from US that is not offset by the Saudis. So we have to monitor this very, very closely, as you can see, because there's two potential scenarios here.